Hi there, Serial Trader here. Let's check in with crude oil. And okay, so since the last video, there has been a significant enough development. So I have this horizontal line here just showing where wave 1 as it was labeled here ended, and now we've actually had what was, at the time being considered a potential wave 4. Now we've gone below that line, we've overlapped, so no longer can this be considered a wave 4, which actually significantly changes the outlook here for crude, or at least it significantly changes it on a shorter time frame. Big picture, I was still anticipating a significant top, but the question was whether it's going to have one more leg up to find that top, or whether the top was already in. Well, I think that question has much more likely been answered that the top's already in, and I'll go through the reasoning behind that. So this wave count needs to be changed now, and here's what I'll do: get rid of this extended 3 as it's labeled here, because this no longer works. And we are going to actually do something like this. Okay, have our 1 up here, 2 down here, 3, 4, and then ending our 5, which ends our larger 5, which ends the larger C, which ends the larger still 4, okay? And if you want to know where we're at in the overall larger wave count, there's previous videos that certainly highlight that for you. I'm not going to go through it today. And this, now you're saying, oh, well, how can this be so? What about all this here? Well, let me get to that. So we actually had our 4 ending, I believe, here, and I'll show you what I mean. And there's actually a triangle here. It may not be an obvious one, but there is a triangle. So we got an A, B, I believe C, D, E, and the D and the E were quite abbreviated, truncated, if you will, but that's certainly allowable, and I've definitely seen that before in legitimate triangles. The important part is that D doesn't make a new extreme above B, and E respects the level of C. And I'll need to change the degree here. So what degree do we have for this 4? It's minute, so we'll have to go for the subdivisions 1 degree under minute, minuet. There we go. Okay. And then we actually had our triangle, so our BD trend line, like so, and our AC trend line, like so. Okay, and then we thrust out in this final 5th wave to complete the larger sequence. So that's what happened there. So that actually works very nicely, meets all the rules and guidelines for wave formation, and I quite like it. And this is not an ABC down as was originally being considered. Okay, we're actually working an impulse wave of some sort to the downside. It's not complete yet, and I mean, it's doesn't have enough development for me to really confidently label it, but I would just say we have some sort of initial move down and a retracement, and then another move down and then a retracement, and now we're possibly in another move down. So we'll wait for a little pattern development before I take a stab at throwing labels on this, but clearly this looks like an impulsive decline. It's sharp. It's not consuming a lot of time compared to the amount of price that it's moving in. The pullbacks are choppy and corrective. The declines are fast and sharp, okay? So there's that. And also, if I zoom out here, well, I should be able to just, zoom out like this. So now B ended right here. So we had our 1, 2. Now if I just drew a Elliott final channel, okay, and to do that you connect the termination point of wave 2 to the termination point of wave 4, which will be right where this E wave ended, right there, yeah. And in parallel from the extreme of wave 3, okay? And that's called the Elliott final channel. And that's to help you estimate where wave 5 may terminate. And it can either terminate kind of at this center line, or if it has a blow-off wave 5, it can terminate at the, you know, upper boundary line of this channel, or even have a slight throw over. And then come back down. But in this case, we had a more, we'll just say subdued or typical wave 5, and it just failed basically at the center line. So that's quite palatable. And now I'll mention that we're actually coming out of this final channel. Okay, so we've broken below the final channel support line, and now when we came up in this retracement, we actually now found resistance where the channel used to offer support. So that's fairly bearish using that technique, and now we're, you know, coming back down again. So there's lots of you know, technical reasons here to believe that we have a significant top in crude. So I just thought I'd bring that to your attention, because that is quite important, really. And okay, I'll just get the scale back, something like that. So we'll go to the, I'll just leave that in your mind here. This is why I'm not bullish on crude here, and actually I'm just looking for a bearish entry. And I haven't taken anything yet, but to me the next trade of significance with some patience will be a corrective advance of some sort, which will set up for another impulsive decline. Okay, let's go to the Thinkorswim chart, candlesticks. So just to highlight, on the weekly chart, we had our bearish engulfing, and then that implied the next 3 to 5 weeks would be in this direction. Well, so far we have 1, 2, 3, 4 weeks. This week's not done yet, but at least 3 actual closed weeks that were in that direction. So we've satisfied the minimum expectation of 3. Remember the guideline's 3 to 5. So in this case, we've satisfied the minimum expectation of 3 candlesticks in that direction. So we may be having some sort of corrective advance this week, but it remains to be seen. Again, the week just started. So, and I'll also mention, still below the T line and the 3 T line on the weekly. You know, moving average is starting to roll over. Not oversold yet. So that tells me we can have some further weakness. Now on the daily, we'll get to this here. On this line here is just the 4-1 overlap, just to show you on this chart too, where that took place. So yes, we've definitely had the 4-1 overlap, which changed that wave count to something more immediately bearish than what I was looking at before. And okay, so daily, definitely weakness, the T line, and you know, in the strong decline areas, even the 3T line acting as resistance on the way down, and then that 3T line unable to cross above, and then we got that bearish engulfing daily on Friday last week. Now we've had this recovery up, okay, now this is overnight trading, but in today's regular trading we had this recovery up, but notice how we actually just didn't even get to the T line, and now possibly overnight we're already starting to reject off of it and maybe roll back over. So definitely I have a bearish bias here as far as direction. No current active trade, but certainly the next trade I'll be looking for is a corrective advance to enter for a downside trade. So hopefully that helps you with crude, and hopefully you can, you know, see the opportunity in this market. You know, downside opportunity can be just as good or better as upside opportunity. Sometimes these things move faster, and they're just more volatile when they're moving downward, which can be excellent for trading. But you just have to be flexible enough, you know, mentally flexible enough to entertain those trades the same way you would a bullish trade. And really, if you're really a trader, you know, up, sideways, or down shouldn't matter as long as you're using a methodology that can give you an edge, and you're using good trade management. You should be able to make money in essentially any market condition. All right, I won't drone on too long here. Serial Trader signing off.